Everyone, welcome back to the rationalinvestor.com's Broiler Chicken Show. If anything, Chris, if things are settling down in your neck of the woods, we got to get back on the building the little lead-in promo piece, where maybe we have like a nice little professional intro because that was kind of flat, eh? I'd give myself maybe a C- on that intro. Anyway, we got the webcam up and running. Hi, everybody. I don't know, slick back hair. At least I shaved, so no more porno mustache. But oh well. I know all the ladies are disappointed. We have the Zoom call up and running. And if it wasn't for Chris, I don't know whether I could do Zoom. So many windows, so many buttons. I do see that there are, let's see how we can do this. 1, 2, 3. Well, geez, I guess about a dozen or so people watching. So we just had the level 1 class finish. Fairly well, I guess they had a good 2.5 hour session with the Griminator. I think this past week was introduction to technical analysis, just learning the basics. What's market structure, what is a trend, what is a range, what the heck's an oscillator. So I hope you guys enjoyed that. We did have a Broiler Chickens Q&A document that I suppose we can get to. I don't even know if there were any questions asked this past week. Did see a lot of the questions that are being asked are sort of like high-level conceptual stuff. I don't know whether pertinent to level 1. Would love to hear like, can you talk about CanSlim and why CanSlim is such an awesome fundamental screening tool? But I doubt we'll have questions like that. I have to say, pretty impressed with the website. It's coming along. The breadth indicator, I think, is absolutely invaluable. It now I think it should now become like an integral part of the trading cosmos. There are other sites and services that promote it. I mean, we have a pretty limited community as it is, but I think that the community has come to appreciate how powerful this messaging system is. So I'm super excited about that. My affirmations, I think 2023, unfortunately, that's going to be a bit of a tough year sociologically for the human species. But actually, ironically enough, I'm pretty optimistic. 2023 should mark the bottom in a lot of risk assets. There might be another serious leg lower, and we're probably going to see things like Bitcoin go down to the cost of production and stuff. I did see an article, and if somebody while I'm blabbing away can find it, I couldn't find it when I went back to Twitter, and it's always the case. You see some sort of tweet or article or something, and then you come back, an hour or two later, and you can't find it. It drives you crazy. That's why I retweet so much crap. I just want to make sure that if I want to make reference to it later, I can find it. But I was reading an article this morning, and somebody had written one of those tweets that's like 8 or 9 tweets long, right? And they were saying that some big mining operation just went under. Did anybody read that? I don't know if anybody over on YouTube there or in the Hangout here. Yeah, we got a few people in the Hangout. And what do we call this? I guess we don't call it a Hangout. We call it Zoom something or other. I don't know, a Zoomy Zoom. Anyway, is that it? And my Rocket Chat is acting so screwy. Apologize to everybody, but Rocket Chat on the site has given Stuart some major heartburn right now. It's actually interesting because we're even thinking about maybe jumping ship from Rocket Chat. Had enough of this nonsense. Anyway, so many moving parts. This is our developer cycle, along with everybody in crypto. Where was I? Oh yeah, so yeah, there was, and I don't know. I want to click on it. I think this was the article. If you missed perp DEXs like GMX and GNS, then don't worry, because there's another narrative that's just getting started. Decentralized options. Here's why this sector could 100x over the next few years, plus my top 5 picks, of course. Well, if anything, somebody create a mutual fund of that and just go grab a little of each of those, and probably one of them will do okay, and it'll pay for all the rest. It's really simple. I suppose we'll give a like to the tweet, but that's not what I was talking about, Frogsy. And is that you over there? That's you. Anyway, but there was another, and I just got my silly tweet thing up here, but there was another. Oh, darn. And if somebody, Eddie, you're saying you saw that, tons of that. Yeah, if you happen to find the link while I'm blabbing away here, I wouldn't mind tweeting it out, because I hate to say it, but I don't think this is quote unquote the bottom. And if anything, what I think is that, and I kind of posted it here, what I think is that the market was just ridiculously oversold. Like everything is just in the pooper. And then finally, somebody blinked. And of course, this is all around who and his takeover of Twitter and stuff. And I suppose, I don't think there's been any direct news that indeed Doge is now going to become the currency of Twitter or something like that. But that thing popped hard. We were kind of talking about that happening. Where is that? That's over here somewhere. Stocks. Yeah, what did I do with my crypto list? Fudge. Oh, here we are. The interesting thing about that trade, and I was sort of tweeting it out earlier, and I don't know how much time I want to waste here on all this kind of stuff. But I think what happened here was that this was a fairly telegraphed trade. The one thing I will say is that if Alan's algorithms and stuff are all trading this, then the stuff that we teach at TRI should become even more powerful, because that's exactly what all the computers are looking for. They're looking for that symmetrical move. And I even posted it in the TRI lounge. I said, I can't tell you how many times over the past 20, 30 years. I mean, it's got to be a staggering amount. But how many times over the past 20, 30 years, and we'll just do 50% rules, I have seen this price chart, especially when we're like down here. I mean, I can't tell you how many times I've seen it, especially when you have something like the volume profile look the way that it is. I mean, it's just ridiculous how many times I've seen it. And yeah, and it was Sharky, I think I was talking to in the lounge, and I was just like, what we need to do is you need to be able to take a screenshot of this and then have the computer go on this interwebbing or internetting or whatever the fuck it's called, and just go and say, find me pictures that look like this. And, maybe you throw $1 or $2 at them and just, let's see what happens. And, the end result is I can't tell you how many times I've seen this. This is the whole point of me teaching the 50% rule as a profit objective. And look how the price is almost basically sitting right on that 50% rule. I mean, it's nuts. The script I wrote does split out that signal. Oh, awesome. Excellent, Josh. Josh was a super coder. I think you all have a real special treat, in my opinion, having Josh at your disposal. In fact, it was so funny. Like last week, I couldn't believe it. I was sitting in the class. This is a level 2 class. Josh was he's going to graduate from TA to instructor. So way to go, Joshua. So I was sitting there in the level 2 class, and we have Kiran, Murat, and Joshua all sitting there, group teaching these people. they don't realize what an incredible treat that they were experiencing. Now, I just sat there and I just listened to the three of them, and I mean, just the powerhouse of brain power is just incredible. It was such a treat. Level tours were so lucky, so lucky. Actually, I mean, everybody at TRI. I think these guys have put the miles under their tires, and they know their shit really well. It's really nice working with all of you people. And actually, it's really nice working with the student body too. I think on balance, people appreciate that. I will say that we could probably spend the next 2 or 3 hours showing you all of the different ways that we would have gotten a quote unquote buy signal on this asset down here. Whether it be indicators all spitting up W's, bullish divergences. I think you've heard that Beamish guy go on about that. Volume signals, right? Willie stupid, right? Blah, blah, blah. I think on balance, on the one good thing about the interneting is that you are going to get a really, really diverse view of how to skin cats. Now, this guy prefers to start at the head and work his way down. This guy, he prefers to start at the tail and work his way up. This guy, he likes to take one paw at a time while the cat's still alive, which is pretty cruel, but anyway, that's terrible. Sorry. But the point is that there are so many different ways to skin a cat. I mean, you've heard the cliche. What I do find interesting about this business is there are a lot of male egos at play here too. And the male needs to sort of set his stamp on the world. If he's if he wants to be an alpha male, he's gonna try and dominate the sort of the pack, if it's a wolf pack leader, all that kind of stuff. So it's really, really important for different influencers and stuff. Of course, in this world now, money is sort of the talking point. So you got to be eating the gold steaks and all that kind of stuff. But I find very few people talk about this sort of the overall, how the hell do you run a business of trading kind of philosophy and approach. And I think we're trying to convey this at TRI as in trading we call it the process. This whole thing from building the business framework to how you're going to approach yourself on a day-to-day basis and how you set yourself up that you report back to me, yeah, Brian, I mean, I did take the trade. Here's my reason number one, here's reason number two, here's reason number three. And if I didn't take the trade, I'd actually be pretty pissed off at myself. And yeah, I did just bang out a double, and now I've got free Dogecoins for whatever. And maybe we'll take the free Dogecoins and send them off to Mars, and they'll have my name on them or something on the blockchain. Well, I don't know, something crazy like that. Point is, they're free, so who cares? I mean, that's the one thing I'm really trying to teach you guys is if you can get into that, there is no risk of ownership of this asset, then it doesn't matter. And the stress of this whole business of playing the game, it just vanishes. And I think that everything about this chart speaks to, number one, the concepts that I teach, but also two, big part of what I teach is how the hell am I going to set myself up to do this? And to actually be there and present and paying attention. And I actually did pull the trigger. I mean, the irony of it all is that I have a personal kind of angst with this gentleman because of his use of the autism angle in his public relations. But that doesn't mean you can't apply the principles that we teach about the process to go and make money off of him. I mean, it's just the way it is. But anyway. So I think this was the story of the weekend. What I found really cool, and again, I didn't tweet it out. I see it like once, and then I turn my head and I come back and it's gone. but if I'm not mistaken, I was really impressed. This guy that I'm working with on Wednesday, Paul, uh, this guy, Crypto Traders Arena. This is the sign of a smart ass motherfucker. This tweet I saw out of him yesterday, I even liked it. I was so impressed. I think I even said, like, I replied nice. And this is actually the point that really all of you as sort of like mature traders, you already understand the process. You understand what type of risk taker you are. You understand you've already have your account set up and you have your trading plan. You know how much money you're going to put into any one trade, one other way or the other. And you're sitting there at your sort of battle stations and you're flexible and you're just paying attention and this is where we get to opportunity is now here versus opportunity is nowhere. If you have all your shit together, and it's beautiful working with Paul, I have to say. I mean, he was a cop, so I guess it makes sense. He's a machine, and the his little crypto traders arena, they're just kicking it. And if anything, it's such a beautiful testament. Paul has bought into the idea of the process. He's bought into it hook, line, and fucking sinker. And this is a really good application of, I see something going on. I can connect the dots and see other opportunities develop. And can I take advantage of those other opportunities because of, in the level oneers right now, you just got introduced to sort of intermarket analysis relationships. And here's a good example where, according to, in fact, he even writes there, crypto markets usually pump in sectors. Well, it's the same thing in the stock market. If one of the reasons why a lot of these technology stocks all lift together eventually, and you've heard the expression, a rising tide lifts all boats and a falling tide sinks all boats. So same sort of thing here. Doge gets going, and so these guys pile onto the Shibu. Now, what Shiba Inu, I think it's called anyway. So way to go, Paul, you badass motherfucker. Just like boss, and that's the sign of a pro. Damn. So if anything, I aspire to be this good. He's in the zone. If anything, who does that video? Mark Douglas, right? Mark Douglas, I think that's his name. Trading in the zone. You should get in touch with Paul. Paul right now is trading in the zone, and it's cool to watch him in action. Gotta say, it's pretty damn impressive. Hats off to you, Paul. I guess, from my perspective, I'm just absolutely enamored with my internal tools that we finally sort of brought into the 21st century. Another big fucking huge round of applause to Sjord for pulling this off. It's working very, very well. I think if you follow me on social media at all, this is me. I'm a bit of a salty guy, so I'm not really, this is my take on cryptocurrency, this cocksucker. So, that's unfortunately the way that I look at crypto, which is a bit sad. But nonetheless, and actually it is interesting. I've noticed since Alan has come along and fired a whole bunch of people, Twitter's gotten a little bit crusty. Isn't that interesting? Look at that. It won't load for me. So I wouldn't be surprised if I put a funny meme out. Let's see. So I can't, is anything gonna load for me? Oh, here's and Josh, who runs the TR. Oh, look at that. It crashed again. See, isn't that incredible? Is that an algorithm at work? I wonder what's going on there. Anyway, kind of interesting. So I doubt it's just a pure coincidence that that's happening. So anyway, Josh put out a funny here, this one right here. Just he sort of put out a contest, just say, give me a funny meme, and tongue in cheek. I didn't think that this was a very good buy. And frankly speaking, we've been following Twitter forever. And I remember specifically through here, Twitter was absolutely on its knees. And, like literally, Twitter was dead. And then all of a sudden, this guy, Donald Trump, just comes out of nowhere through that 2016 election and literally resurrected Twitter from death. And all of a sudden, it just became all the rage. Is he dead? I didn't know he was dead. Well, that's too bad. The guy who did the trading in the zone, he's actually dead. Oh, son of a gun. Well, I mean, I'm yeah, that's thank you, Constantine. That surprised me. I did not know that. But anyway, and interesting on Twitter how they actually left these price gaps down in here, right down at basically the original bottom in the stock price. Do we have some sort of rule about price gaps? Anybody help me? And if you take the level 2 program, of course you should know this. What's the statistical probability that these gaps will be filled in at some point down the road? Anyone? It's pretty high. You want to Google it for fun while you're watching this video? And don't look at the chat because they already answered it. But if you're watching this video later on, just stop and Google it. How often do price gaps get filled in? And there was a guy who actually did up a whole study and he found that it's like 91%. That's ridiculous. So, I'm a bit surprised, to be perfectly honest, it is that he came in and he paid this price way up here. That really surprised me. And, that's basically, it's about a 3 or 4x. Now, I had this as a percentages. I'm not quite sure why I had the screen as that, but you can see it's a good, two, almost 3 times the level that I would think that a smart guy would probably pay for this. And, there's probably quote unquote the trade right down in there. And I wouldn't even be surprised reload zones that there is the trade. You can see the W. It's as plain as day. And the thing is that Elon can see that W too. Don't kid yourself. He knows what's going on here. So, if you just apply the simple principles of TRI, well, okay, pay him maybe this price here, fine. But he paid like way up here, and I don't quite understand that. Now, maybe I wonder whether he used all this sort of phony baloney around the price action over the past month or two to play the derivatives markets, and basically see if he can game the market and get the stock for free. It might be interesting. I doubt it, but maybe. But I'm a bit surprised that he paid as much as he did. So my joke was, and then we got him to pay $54 a share for a company that was trading at only a quarter of that only a few years ago. And if I really did want to buy Twitter, and I don't know whether I'd really want to buy it or not, but I would be bidding down at these gaps. I mean, that's where I would want to be long, not up here. And the funny thing is look at that huge M that's just staring you in the face. And at TRI, we have a rule, at least it's one of my rules, that I don't really want to take a trade unless I got a W on the other side of this trend line. And you can see all we've done is we've just bumped up to the trend line. And now, boom, I think that he's taken the company private and they're just going to stop trading. So I don't know. Anyway, it is what it is. I don't think this was the big beneficiary of the deal. As I said, I think the big beneficiary was dog money, dog money, dog money. Woo! And the sad thing is, this is the tragedy of it all. Is okay. Looks like we got a really cool situation where if you had come in and you had bought the bottom and you had sold into that rally, boom, you now have free coins, which is the best. There's no better feeling. And I think that was the trade to basically generate a free position here. Ironically enough, and this is where we get into the, and they, like some of my traders from last cycle, I guess 2 cycles ago, car carrier. um, we used to call it buying multiple cars, where what you really want to do is, like, say this is Doge, that each one of these opportunities that spits up this trade, and it might even be happening on Bitcoin too, so be prepared, folks. But each one of these trades you buy, that's a vehicle. And interesting enough, you can kind of see it almost looks like a vehicle too, right? Doesn't that kind of look like a car? If I was like in grade 3 and I was drawing what a picture of a car would look like, doesn't that kind of look like a car? It looks like it to me. Anyway, we call these cars, right? So it's my vehicle to get rich. So there, my friends, and what I would even suggest you do, and I've done this before, made great money with it. It's an awesome strategy. Is let's call this purple, and we'll even save this, right? It's on the list, so it's not going anywhere. And we'll call this car number 1. Car 1. So there it is. Car 1 has now been bought and paid for. And the best part about this, folks, is that this technically now, if you had placed your shod order, sell half on a double, right? Even from that level, that's 6.8 cents. So that's 12, let's call it 14 cents. We'll be generous. So 14's right in there. Look at that. You got your fill right into that rally peak. You're like a total boss. So car 1, shod. And now this is where, like I said, real pros, my hunch is that they're just going to draw a reload zone off of here. And oh, what a surprise. You'll notice that the reload zone is basically going to be the original bottom. Oh, look at that. 78.6. You know how much Brian loves that level. And you just throw in your next order. Right. And now if you can get filled on this next order, and there's no saying you can, there's no saying you can't, but maybe even work it off of that level. We'll maybe make that orange, right? And we'll call this car number 2. So let's see if car number 2, and I don't know how long, it might take a month or 2 to get a fill here. Who knows? You can see we've already come back down. This is probably now into like calling pump chaser zone. I guess we're back into pump chasers because this is a bull market again. Yay! Isn't it fun? We're back to bull markets. God, we haven't seen this in a while. All right. Boom. There we go. So 38.2 Collins pump chaser zone. What I would simply say is that this is our first stop target. You level 1ers will learn this. Sometimes the first stop is the only stop, and we start Wing out, and this will be a bot setup maybe, and we start working our way to make an A, B, C, D. You never know. But anyway, I call this 38.2 the first stop. And what to add that next car, so we've got this guy bought and paid for. We've got our capital back in our pockets. Now it's time to get this car, right? And then ideally, if you can do this 6 or 7 times in a row, and I did do this before on like, a couple of the stocks we did it on recently in the last cycle. One little lot of capital. If you can get 2 or 3 or 4 cars on, woo-wee, it can make you a lot of money on the way up. So anyway, that's what I see happening. And ironically enough, the trade, I think, of the weekend was all around this story, which is a little bit dangerous because, of course, we have been talking about how the market has been lifting up here. And I'm a little concerned, but then of course, if you've gotten to know me, then you know that I'm almost always concerned about something, if anything. And that's, I even gave it some serious thought that maybe I'm just going to go back into the brokerage industry. I'll call up my old rich clients and say, hey, give me a couple $100,000 to manage, and I'll just go back to being a broker again. Just have fun going back in that life. But, where was I? Oh, damn, I can't remember what I was saying. I lost my train of thought. Darn it. Oh yeah, looking at the breadth indicator. You know, now that we have this tool in place, I'd be a fool to leave this. So anyway, the point of the matter here is we're getting messages, especially out of the big blue chip stocks. So if I go here. The Dow Industrials, I had put a message out on social media. If anything, this is a really good example. You know, with relative strength index, I've shown you guys how the resolution of the 50 line can often be a huge pivot for RSI. Below it is a bear, above it it's a bull. Well, you can kind of see, in fact, actually, there's a lot of guys that I used to work with that they actually use 60-40 on these oscillators. So here as an example, I suppose, where the DI ran up into 60s and then was rejected, but then ran up, broke through, came back, kissed the other side and just accepted higher. Very, very bullish. And what was the end result? The end result, I don't know whether you guys have been seeing or not, but wow, it was a huge move. So this is where I think the sort of meat and potatoes of the bull was. All right, look at that move, eh? Boom. So, and it was interesting, right? When this came in, I had just said, and I want the level oneers. I wanted you primarily just to practice using this tool and logging and diarizing what's the entry level, what's the stop level, what's the take profit level, what happened, right? That's really what I really needed for you guys to be able to take away from this. And that, just learning that is actually the value of the course itself. Again, start off the conversation with, you know, there's a million different squiggly line theories out there. I mean, really, if you can just understand the concept, W's are bullish and M's are bearish, you can apply this shit to anything. It doesn't matter. Volume analysis, price momentum analysis, volatility analysis. You can do like you know, the width of Johnny's Bollinger Bands and plot that. And again, W's are bullish, M's are bearish. It's just that simple, folks. If you want something free from this video, you're sitting here going, this guy's just blabbing away talking about nothing, just write this down. W's are bullish, M's are bearish. It's just that simple. The problem is implementation, execution, actually taking the fucking trade. That's the hard part. So anyway, point of the matter here is I think this was a pretty interesting setup. And when this fired, you couldn't give away stock. And all the talking heads were just constant bearish, 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 bearish. There was only one analyst that I really respect, a guy named Larry Williams, who was sort of making the postulation case that we should look for a rally into the end of the year. And, you know, I sort of rode on his coattails a huge portion of the year because I respect him immensely and I agreed with him. So it always helps when you agree with the guy's analysis. So that was our whole. And gee whiz, I really hope you guys learned from this. I really hope you learned from this because, man, this is such an incredibly powerful concept. You know, this is, and I even said it through the year, that this is actually one of Warren Buffett's favorite indicators. I let it go. I like Warren Buffett, like, said, well, it's probably worth something. Good old Decennial report. And actually, I even had somebody even recently reach back out and say, man, that Decennial report, man, that is just fucking gold. And then also, too, we have our political map, right? And we are now finally into the meat and potatoes of this. Now, like I showed you there, like I think that the primary rally, the focal point of the rally was around the big blue chip stocks. And interestingly enough, as you move down the food chain, the S&P 500, not so much. And if anything, I'm a little worried about megaphones here. This looks a little dangerous now. We could easily explore back to the downside. Then we sort of, as we go down the food chain, you actually kind of see, like the NASDAQ. Actually, he has not actually broken out yet, which is scary. I think everybody and their brother has assumed that this has broken out, but I don't see it yet. I mean, you can see volume is still fighting like the dogs. The bulls have actually backed away here recently. That's not good. I think that stocks like Apple were way too oversold. Still short from way up top here, and my stop on the remaining position is just sitting at scratch. Has this thing actually turned the corner back to the upside? I don't know. I would say that looking for counter trend rallies into these levels probably is appropriate. Probably also too the fact that we have this big fat bullish Q reversal. Sort of my rules are I'd like to see a W fully on the other side of this trend line. I don't know whether I have that or not. This seems awfully steep. So is this nothing more than just a dead cat bounce? What I'm concerned about from our decennial report perspective, and keep in mind, right, this damn Dow, that is just one monster rally there. Boom. The decennial report kind of says, well, with the Democrat president, second term, or, second, and I don't know where my head is. Sometimes I actually cut this off and you can't see it. So I made that mistake on the Rumble video yesterday that I did. And I've done that a couple times. So how am I going to do this? I can't move this over, right? Maybe I can zoom out. There you go. Now I can go up and down, but I can't go in and out. Anyway, hopefully you can see that. The just for your reference, just so you know I'm not bullshitting you. Maybe one more, something like that. Anyway, right down here in the corner, and hey, here's a sales pitch. Why don't you come to the website and read the damn blog post yourself? There's the link. Hey, and this is hats off to Josh. I mean, just I don't know whether it's Joshua or Josh or Josh or Josh. You guys are awesome with so many Joshes. Quit joshing me. All right. But there's dad joke for you. All right. Anyway, so the point here is you can see second year, new Democrat president. That's this blue dotted line. You can see the counter trend rally wasn't overly impressive. And we weren't even really like there's the summer rally peak. I mean, we're just a shadow of what that is, even after this rally. And then you notice, and this is what kind of concerns me now, is oh, that's interesting. Why that's so small. Oh, fudge. Now what have I done? Okay, bear with me here a second. Is this going to zoom in or out? All right. Once we get into November, and I have a feeling the market's going to rally into the Fed. That is what that is. And that's not a good sign. We don't want to see the market rallying into a Fed announcement. That's because usually that's a buy the rumor, sell the news. Market's hoping that maybe they'll get a nice treat and maybe the Fed won't be as big a dicks as they will. And I think that the Fed's hands are tied. I've talked to you guys at length about that in the past. I don't know whether you want to see that chart or not, but I'm going to show you. Sorry. I'm such a jerk sometimes. Boom, boom, boom. And I'm actually a little disappointed there aren't more people on the interneting talking about the TED spread. This was such a popular analysis tool in years gone by. Fortunately, it can't be called the TED spread. It has to be called the Fed spread. Anyway, here is our interest rate cycle. There's really no reason why we should be expecting any change here. Just sort of muscling our way through. The good part about it is now you can see if we update it here, we only have another 10 more months of this shit to go. But once that's done, then it should be done. And, like all cycles, at the very bottom here, of course, the public's going to be clamoring that's the end of the world and interest rates are going to go on forever, endlessly higher. And that'll be the end. But as it stands right now, there's not really anything to squawk about. If we look at the short-term situation, this teal line, they really want to keep this below 1.0. Don't really want to see this get above 1.0. And you can see every time it does, the Fed reluctantly acts. So we got up into here, Fed acts, boom, it comes back down. We got back up there, Fed acts, it comes back down. Comes down, comes down, comes down. Euro dollar market absolutely puked out there. And I think that's when Theresa May did her thing. No, Theresa May, that's an old reference. No. What's the name of the girl that lasted less than a head of lettuce? Truss, something like that. I think that's when she started her antics, but that might have been here. I don't know. Anyway, I doubt I have the news events correct. So euro dollars puke out, ratio goes back above 100. Fed's like, oh God, we got to do something. And so they raise rates. Markets sort of humming along. Then, of course, they raise rates again. So, okay, things are really working. Okay, then all of a sudden, euro dollar market just pukes out big time. Back above 1.0 we go. I think that was the UK crisis right there. Yes, the Fed acts, brings the relationship back to 1.0. Trust. Thank you, Andrew. And that's actually now support, which is dangerous. So if anything, you really want to see the Fed act. Don't start getting political here, Fed. Because if they do and they start saying things like, well, we really want the Democrats still to be in power, so screw it, we're not going to raise interest rates. We think everything's fine, right? And then all of a sudden this thing puts in a big W here and bots out and starts really going crazy. And then we got a major problem on our hand. So I think the Fed has to act. I really don't think they have a choice. The question here is this euro dollar market going to calm down a bit here? And we've got the smatterings of a little bit of an inverted head and shoulders there. That probably has already hit its price objective. Kind of like I had an inverted head and shoulders here, but it never came in and we just kept on going down. This one did fire. And I think, just over the past few days, I've kind of noticed the tone in the market has gotten a little friendlier. And I think it has specifically to do with something has said or something was done just over the past week or so that relieved the pressure on the euro dollar market. I don't know what it is, and we'll probably only find out after the fact. The question really here, though, is can they get this ratio back below that 1.0? Like right now, it's at 1.29, too high. That's unsustainable. So Fed's going to have to act. And here's the thing. If the Fed, at 1.29, if the Fed goes 50 beeps, then, and that's our blue level here. So boom, we have another big lower leg. If they go 50 beeps, then that will bring it. And if the euro dollar market is just, okay, we're fine, everything's hunky-dory, no big deal, then that will bring this relationship from 1.29 right down to 0.8, somewhere in that area, right in there. And that will be below that magic 100 level that I think the market pundits really need to see. So we'll see what happens here. I did find it interesting that the Bank of Canada only went, I think, 50 beeps when they could have gone 75. And the market was expecting 75. So the problem is that I think that the Bank of Canada is highly political. So if anything, the one thing that was sort of a standout feature, now the problem is, do they all work for the same fucking cronies? But, is the Fed sort of slightly immune to politics? I don't know. That's a tough one. What I will say is I think the Fed kind of sees the writing on the walls, and frankly speaking, I think it's exactly what they want. Is that the American populace? It feels as though they're not nearly as socialist as I think that the current sort of ruling powers in the United States are very socialist. And of course, we've seen all this defund the police and all this kind of stuff, which I don't think is actually the true America. I think I've said this before. I think the last election was just nothing more than a protest vote against Mr. Trump. I wanted to show you guys, but now I don't know where the hell it is. I hate when I do that. I start talking about something and I get off topic. Fudge. We're talking about the Fed being politicized. Oh yeah, that's what I wanted to show you. So where the hell is it? There's a cool, and I don't know whether it's actually legal or not, because there used to be one in the States. I used to call it in trade back 10, 15 years ago, and they actually outlawed it. They made it illegal for it to operate in the United States. And it was just basically placing bets on political outcomes. And the politicians really did not like knowing the odds makers were placing bets against them. But I don't think I have it open anymore. I think I got rid of it, which sucks, horse cocks, because I like to sort of keep the odds makers. I could have sworn I had it over here, but I don't see it. Darn it. Anyway. Oh no, I can't figure that out. It's too quick. Anyway, so there was an odds maker site. Maybe somebody can find it for me while I'm blabbing away here. An odds maker site that had I think the Republicans ahead by like, I don't know, I think like about a 3-to-1 odds, something like that. I think that was the number that I saw. So if that's the case, then the Republicans are going to shut down a lot of this insane socialist spending that the sort of left wing have in place. And I think they'll probably sort of rein in some of these budget deficits that are just absolutely out of control down in the States. And in a weird sort of way, I actually think that lays the seeds for this further sort of rally into the end of the year. It also, I think, implies that the Fed doesn't have to go as hard. If we can somehow bring these socialists in line and they just stop the runaway spending and these deficits, people actually start talking about, hey, we got to get these deficits under control. It's not going to be happy-go-lucky times for everybody, that's for sure. The economy is probably just going to languish. But maybe where, the Fed's going to be like, okay, well, we don't have to go as aggressively, and they start sort of slowing down their pace. But at the end of the day, I really think that it has everything to do with what the market thinks. So in a weird sort of way, I mean, nobody over the past 20 years had even the slightest, in fact, really, God, I'd even say 30 years, had even the slightest notion to pay attention to the euro dollar market. Now I see there's a George Gammon guy. He's got his Euro Dollar University guy on there constantly. And people are actually, and we might actually find that people actually get interested in the TED spread again. So go figure. From one gnarly old time trader to another. So let's keep an eye on the euro dollar market. That'll probably dictate sort of the tone going forward. But I guess what I'm worried about now, actually, I did a study earlier today, and I sort of thought about this in earnest. How has the market acted through recent Fed meetings? Interesting how the market really fell apart. This specifically about Bitcoin and crypto really fell apart here ahead of this June meeting. Actually, we even noticed that June there was some pretty wild action. Didn't react so negatively here, but we were definitely getting near the end of some sort of move. Did the market sell off and anticipate that move there? Maybe. It's interesting how we sort of have a floor here. And of course, we've got this Fed meeting coming up here. The interesting thing is price volatility is actually coming out of price, which I think it should be a good thing, but really, we can't really discern which way this thing's going to go until we really start breaking these trading ranges in earnest. I was quite pleased to see, we had basically now higher highs and higher lows. I think this low, though, however, is a lower low than this low. What is that? 18,183 and 18,157. Okay, so it is higher. I don't have a problem with somebody buying this big honkin' W. In fact, really, I don't even have a problem with this W here. This is probably a tighter one. It is on the other side of this trend line, but sort of bullish resolutions out of here. I don't really mind that. The problem, though, is what's your risk? And, I was just even thinking about doing this as a demonstration on this site. Really, I could very easily see that this market can play all the way down into here. In fact, I wouldn't even get an outright sell signal unless I actually got a structure on the other side of this trend line over here. And that would set up a bearish bot setup, 3 lower highs, and all hell's going to break loose. So I guess what I'm trying to say here is if you do buy this W, and I think it's valid, it looks legit. The only problem is it's a question of risk. If you're going to buy 20,500 area, you have to be able to risk down to this area here at the very minimum. I would even say you probably should risk against that low over there. So that's like, what is that? That's $3,000 of risk, Brian. Now that's like 10-15% of my capital. You really want me to take that kind of risk? So this isn't sort of like easy peasy. If anything, I do like small bets here, but what's funny is I wanted to do like, in fact, I even had it up and running. I like to do like demonstration trades on this paper trading module, just so people can see like the actual real life. So we have like a spread trade in the corn market that's still underwater, and I really should close it out because one of the legs is December. And then I've got the rest of that Apple trade working, right? So I don't mind putting this trade on here for demonstration purposes, but at the same time too, I consider this like real capital. So I don't want people to look at me like a total idiot. And if I go, and the problem with the, trading view paper trade, the minimum trades that I can do on this thing is 1 Bitcoin. So that means I literally have to buy at 20,500 and I have to risk 15,000 or excuse me, 17,600. Which means that I might have to book a $3,000-4,000 loss. And frankly speaking, that's way too much considering this account size, right? Our rule is we don't want to risk more than 5%, but that's you never want to break that number. It really, what I really like listening to guys like Paul who are trading and just saying, I'm going to risk 1% of my account. So at $100,000, that's $1,000. So that means to take this trade, I could maybe buy like a quarter of a Bitcoin. So I can't even do the damn trade on their sim. Maybe think about other ways to do this. I do think that price is going to come down through this Fed announcement here. What I am going to do right now in earnest is I am going to be watching for this reload zone down here, because if there is like a trader's trade to be had, I think it's against all these candle body lows, and it's a reload zone. This is a reload zone within a reload zone. This is again trend line support. Probably if we look at volume profile, this is probably the bottom of value. Just a lot of compelling reasons to take a shot down here. But up here, considering the actual dollars, if you can only buy like in 1 full Bitcoin increment, no, too much risk. So that's sort of where I'm standing right now. I did do some buying in, I think I'm just going to leave these on as good demonstrations. So you can see this is where that trader's trade is. This is the original double bottom breakout trade, which I like, but since I can't buy less than 1 Bitcoin, I can't do the paper trade illustration for you. But I actually really like this trade here. I think this is the trader's trade. So I'd be curious. And like I said, considering we've got this FOMC coming up, I'm a little bit worried about the way the market is rallying into that event. That's specifically like that conversation. That's too strong, too far, too fast. And I'm just wondering, especially based on the fact the way that the Canadians only went 50 basis points as opposed to 75. I'm wondering whether the market is going, wow, fucking A, man, maybe the Fed only goes 50 basis points. And that's why they're rallying so strong here. Bad sign, I think. And then, like I said, coming full circle, I don't like how we should, and you can see right across the board, there's a bit of a pause. And this makes sense because it's an election. Right when you're going through the election, that's not when you're going to have a rip-roaring bull market in anything. If anything, what I'd be worried about, and I mentioned this in recent broadcasts, is the one market I would be paying attention through this election is Stanley Druckenmiller's gold market, because the election with Trump, he pulled off an absolute coup in the gold market, just killed the market. And I mean, I don't know what it's going to be, but my hunch is the election's going to happen on election night. Gold's going to have a huge move. Maybe it does something crazy like probably the best way for you to see this is the spot market. Whoops. Gold there. Maybe it, yeah. Yeah. So, look left. You can see if we start going crazy, we might have some sort of insane candle like down into these levels, down into here. All right, let's go. Down into there. Fill in all of this. And it's, what concerns me, of course, is that huge M. So, maybe like the two scenarios would be that we get some sort of insane dump and everybody goes, oh my God, the gold market's collapsing, right? And they just dump it right into his buy orders down there like 1,500 or so. I could totally see that. But then also too, going the other direction, maybe we get some sort of insane, civil war, shots fired at election polls and all that kind of stuff. And the gold price spikes all the way right back up top here. Reload short zone, and he's in there selling the. So there you go, 1,500. So between 1,500 and 15 and a quarter on the downside, and what a surprise, right around 2 G's to the upside. And somebody mark my words, because I think we're going to find out after the fact that Druckenmiller came in and he either hit that like a son of a bitch or he bought that like crazy. So we'll see what happens. But that's where I think the fireworks is going to be election night. Then, what I would say, if we think about, like, I think that stocks and Bitcoin and crypto are highly, highly correlated. So, maybe we're getting a bit exhausted here. Was the Doge rally the rally here? And then, like we sort of pointed out on the election sort of forecast, following the actual election, actually, and really even the Fed, following the Fed, we actually go and M out. Everybody's going to turn like absolutely insanely uber bearish about halfway, 3/4 of the way through November. But actually, that's a trap. But, it would be on that pullback following the Fed, following the election, heading into sort of that cyber market, right? That actually the market's looking sanguine. It's pointing down, but then it puts in a bottom and it gets ready for a monster year-end rally. I can totally see that. And I guess the question ultimately here is, does the political pendulum swing violently back to the right, which we've seen in like places like Italy, some, local regional elections, some municipalities. If I'm not mistaken, I think New York State just had a vote. From what I understand, though, it's absolute chaos in like Brazil right now, but when isn't it? Anyway, so my hunch is that this could be a bit chaotic through here. But once we get sort of into sort of post, everybody's getting used to sort of what the new world's going to look like. And we start talking about what is it? They've got a funny name to the they go like congressman elect and senator elect and all that kind of stuff, right? And there's gonna be lots of, oh my God, how is Biden going to deal with his new Congress and all blah 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 blah. Anyway, so I believe it or not, actually, I think the lion's share of the rally is already being priced into the market. Now, the interesting thing is we still have that Ethereum options expiry the end of tomorrow. So could there be one more push up here in crypto here before that options expiry? I don't know. It seems logical. I was surprised. And I suppose why don't we go take a look at ETH and see what it looks like. What do we got here? That's the stock market. Where is the cryptos? The cryptos. Here we are. Right. So stock market. Oof, ETH. So there is that $1,800 wall up there. And I don't know, because oh, interesting. They have a whole bunch of other stuff on here. Okay. I'm a little bit country. I'm a little bit rock and roll. ETH. I don't know which one it is. Oh, November. Oh, isn't that interesting? So they're not even showing the October contract. Is it November that expires on October 31st? I don't think so. November. Oh. What does that say? That expires. Maybe the November options do expire. Nope, 31 days. Yeah, so there's October. Oh, isn't that sneaky? Okay, so they were trying to hide October on us. This should expire tomorrow. So interesting how it says 0 days to expiry. Technically, tomorrow is the 31st. So I'm not quite sure what's up with that. What surprised me, there are the calls. Oh, interesting. Actually, maybe we'd better do all of them. There we go. Okay. 2,000. Wow, look at the size of those calls. So the calls expires worthless. But this is interesting. Does this 1,800 put, if they finish the market where it is now, this option expires $200 in the money. That means that the person who owns this option, they might even have it auto exercised, which means they will automatically sell at $1,800, and Wall Street must buy the asset off of them for $1,800. So that's interesting. Frankly, I'm surprised that we are so deeply in the money now. How much of this is nothing more than just a strangle? Because it looks like there's a pretty big chunk. Like we could probably even find the day that they did this where the volume is almost the same. I don't know whether they have charts. Do they have charts? Interactive chart. That would be cool to see. Let's see what we got here. Oh, very splotchy. So yeah, it looks like it was done basically that day right there, September 14th. Boom. Right, because prior to that, it was all the way down there. Somebody came along and just kaboosh. So September 14th, let's keep an eye on that number. How did I do that? calls. What date was that? That was September 14th. So isn't that interesting? Somebody put a strangle on. Wow, look at where they did it. Way up there at 135 bucks. Interesting. So they bought the calls for 135 bucks. And I guess we said they wrote the they bought the calls and they bought the puts for 135, and the other one was for what number is that? 200 and change, eh? Wonder what price that is. There it is right there. 355. So it sounds to me about 500 bucks, eh? So it's interesting because it's going to expire at a worth about $300. Yeah, because the put should expire worthless, or the call should expire worthless, but the puts are worth about 300 bucks right now. So I'm kind of underwater on that trade. I tell you, that surprises me. And the way that I saw price acting here, I thought this was a foregone conclusion. They were going to get this thing up top here. That's surprising. So if I understand correctly, and just sort of my crappy interpretation, quick interpretation of what I just saw there, their cost on the trade was about 500. And that's worth about 300 right now. So for them to break even, they need this thing to move down a good couple $100 from that level into sort of whenever that official expiry is, or get it up top here. So basically the whole trade is a wash, but still they're going to lose money on the transaction. That's a tough one, I don't know what the hell they did there. Did they do? Maybe they bought one side and sold the other. Yeah. Anyway, I'm gonna give that some thought. We'll see how that plays out tomorrow. I'd be curious. I wonder if there's any way we could get a report on whether these things were actually, because this is cash settled, right? It's not like they're actual physical ethers transacted. So I wonder whether the math comes out as a wash for them. Anyway, I just wasted everybody's time there. Sorry, everyone. Okay, so a little bit concerned that we've got Fed coming up so closely here. And we have moved up quite a bit. We see where reload zones are. And then the question I have is, what's the market going to do on the other side of this Fed? And what is risk going to do on the other side of this Fed? Could we have a little period here where, is crypto really going to go crazy through the election? I don't think so. Could we have like a period here where maybe into like the middle part of November, we actually pull back into these reload zones? I'm not saying it's a foregone conclusion, but if we like zoom down to say like a 30-minute chart, you can see that there is a top in place. If we start looking at things like momentum indicators, you can see this massive div is potentially forming. I would still call that like a wedge. Suppose if we look at a bit higher time frame, there is more sort of divvy type behavior. Still wedging. We'd have to see the market actually break through there to confirm that div. You can see RSI is just a shadow of its former self, so that can't be good. We'd really like to see, number one, you'd like to see these lows hold. So can we get W's that start forming here that are above these lows? If anything, it's good that the sellers really aren't too active here. You can kind of see the buyers were super active. Then they kind of calmed down. Price went to new highs, but the buyers, kind of didn't. Then again, another big rally. Price went to new highs up here. No buyers at all. So that's bothersome. We would really like to see a trend of higher highs and higher lows for the green bars here in the volume. Put it all together, looks like just a big meh. I don't really like the idea of chasing the market right here. I suppose if it's going to be trend continuation, we want to go something like A to B. We'd like to see at least 33, but no more than 66. So we still have to wait for this thing to come down, probably test these lows. probably what this is going to create is like a head and shoulders. So something like that, like that. So my hunch is if I was to have one, is probably going to have to do something along those lines. And of course, there is that Fed day. As I said there before, actually, you would prefer, if you are a bull, you would prefer that the market just keep going down here into this Fed event. And on the Fed event itself, there's some sort of play against these lows, some FU candle kind of thing. Everybody's going to be thinking bearish, but then it turns up and it heads back up. And if that's the case, then rock and roll, let's hunt bots. Away we go. But as it stands right now, I had the idea that I just wanted to buy on a stop on a break of this level. With the fact that these darn momentum indicators don't look very happy right now, that's a potential div, no doubt about it. I don't think it's confirmed yet, but it's still, it does have you concerns. Like I said, volume impetus, we actually have the bulls officially falling asleep here, and you can see the bears woke up here. And on that red candle where the bears woke up, oh, gee whiz, there's a big fat M that fired up there. So until we start seeing the bulls actually come back in earnest, and we actually start seeing some WE type price action, there's not much I can do. Just big hurry up and do nothing. So there's your market. Got Fed coming up, and my hunch is probably tomorrow we're going to have some position squaring, but to all intents and purposes, everybody's now in Fed watching, waiting mode. As I said there earlier, could they pop ETH up just a little bit more to make sure those options sort of expire basically at the money? I think so, but maybe not. Maybe I'm completely interpreting that wrong. I don't know. Okay, so the whole purpose of this call here today theoretically is to answer your guys' questions. I just don't think there's that many questions. So, I guess just to quickly, in case anybody's know, there is a couple names that I was interested in buying here recently in crypto, and then I'll move on. I picked up a little bit of Novogratz off this big W. I suppose there is the smaller W that a smart trader would have worked his order off of. I don't really mind. I mean, really what I want to do is accumulate Novogratz for the next bull market. I kind of dropped the ball down here. I had a bunch of them, then I let it go down here, and then, I missed that rally. What a doofus. We're sort of back down into buy zone, so I don't mind accumulating Novogratz right here. Could we M out and actually have to continue working lower here? Yeah, I mean, there's no real bull market per se yet. I just do see a bunch of W's that all fired here recently. So, we are at or below reload zones. W's, I like them. That gap down there, though, should be a bit of a concern to the bulls. Never got filled on HUTs, but do have an order working here off of this kind of, well, you can see the little W here. See, that's where I should have bought Novogratz. Should have worked my order, but I just paid the big W. But notice HUD here, little W, I did work my order there, so no fill for you. Murphy's Law, jerks. Marathon, same sort of thing. Nice little W, tried to buy, no fill for you. And this block, it also W'd. I kind of like that engulfing bar, candle engulfing bar. Nice key reversal there too. So, but no fill for you, Brian. So if anything, I actually kind of want the market to come down a little bit to give me these fills. So did buy the Matic off of that W. Whoops, we went zooming up here. I think maybe, actually, excuse me, this is sushi. I like the look of this sushi. Holy moly, do I ever like the look of that. That's just so pretty. It's textbook. Actually, that looks a hell of a lot like that Doge. Yeah. But same sort of thing. It's kind of like that Bitcoin. Could I justify coming and paying up here and paying this price up here? Or should I maybe just be patient, identify reload zones, candle body lows for trade location, wicks and tails like to be eaten, blah, 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 and maybe work an order down in here. Yeah, it's up to you. You can see where I'm long. So if you can get in lower than where I am, awesome. Way to go. The Matic is actually looking a little tired, but bot's still just working away, doing its thing. I don't know how closely this is tied to ETH, but I'm wondering if some of this space is actually getting a little exhausted. We might get a 3-bar fractal that fires there. And if that's the case, then we're probably coming back down. So, this is kind of another reason I was looking at the Bitcoin and kind of going, you know what? Stuff's looking a little heavy. Maybe I'll just cool my jets. I don't have to go out and run out and buy. I did buy a little bit here, a little bit here, a little bit here, but I haven't got filled on any of these others. And I was thinking about picking up some Bitcoin, but that's an awfully big risk. So I'm kind of thinking about maybe just seeing if I can get some sort of pullback here after the Fed. Anyway, that's sort of where I'm thinking. Okay. So try and answer any questions. There might be no questions. And if that's the case, then we'll just wind this up early today. Let's see what we got. Spend some time into the coming weeks actually answering these questions. Yeah, actually, look at that. It's pretty light. So that's good. We should be able to do this. Okay, so please explain how you use market breadth indicator on the TRI website in your TA. Well, actually probably, I mean, there's several different interpretations. I think if I'm not mistaken, in the library, I do have a video website walkthrough, the dashboard walkthrough introduction. So I don't know whether you watched that or not. This should give you a bit of a sort of tutorial on how I use both the histogram and interpreting the leaderboards, the actual breadth indicator itself, the histogram. So this is about an hour, 51 minutes. I think that should give you a pretty good walkthrough on how I use the breadth indicator. So what I'm going to say is, first off, please watch that. What? Well, it's well, I guess I'll get to that question in a minute. That's funny. What I would also say, I mean, I could just give you a real crash course. It's pretty simple. W's are bullish, M's are bearish. This is just like an oscillator. Markets that are below 20, especially if you have both teal and red, well, that market's oversold. If markets are above 80, which actually it looks like they are now, not on the teal yet though, but on the red. Oh yeah, even on the teal now. Look at that. That's overbought. It's pretty straightforward. You can see that this is the histogram. When this gets above 80 on the histogram, and you can see S&P 500 according to this, I think we have that last day. Yeah, so we're at 77, 69, same thing. If you see this above 80, it means we're overbought. If you see it above 80, it means we're overbought. If you see both of them, short and medium term, overbought, you better run for the hills. If you see them both oversold, well, it means probably a pretty good buying opportunity. So, this is why I really wanted to be able to scroll back on this thing over time. So you see, if we take our mouse back to this September 26th, and you notice, gee whiz, the S&P 500 is all the way down there at the very bottom. And then we go and look at the histogram, right? And you notice, oh, gee whiz, S&P's oversold, S&P's oversold. If you can juxtapose the US stock market with the global equities markets, oversold, oversold. This is like an uber equity oversold reading. Just the most incredible buy signal. It's going to be one of these contrarian buys, kind of like the way Mr. Nancy, when he's dodging hammers, our terrible joke, when he's out there buying and selling stuff. Remember, Mr. Nancy went and bought like Microsoft, and I think it was specifically Microsoft. Actually, I think also Apple too. We might even have it noted here. So Mr. Nancy, yeah, there we are. So remember, Mr. Nancy, he bought his stock here based on his advisors. But notice the market wasn't exactly ready to bottom. It still had one more wave to go. And then it had its big up push. So that's probably how I would interpret the breadth indicator is if you happen to see that this is ridiculously oversold, it means we're awfully close to some sort of bottom. And when the market is in this type of market state, hunting long setups makes perfect sense. So in this particular case, you notice that these country funds hit a bottom on the 27th of September. So where is the 27th of September? That is right in here. So you can see in Apple in particular, we still had one more leg, and then we had a big fat key reversal to deal with as well. So the way that I would interpret this is, you could, although I don't, I never recommend taking a trade just based on one particular reason. And using this Apple stock in particular is probably not the best way to do this. Let's use the S&P 500, the actual index. So September 27th is right there. So this is another sort of Mr. Nancy kind of thinking that we're getting completely washed out signals in the stock market here. Notice Willie is stupidly oversold. It's the same sort of logic. Notice RSI is oversold. Notice MACD is actually potential divergence. Do we actually have any buy setups yet? Not really. I mean, if anything, just look at this histogram and just be aware the market is oversold. So hunting shorts in this kind of environment, not wise. When we go over and we listen to social media, the kids are going absolutely apeshit bearish. I mean, just ridiculously. I was showing you, there's one little guy, his name's Neil or something out of the UK, and he was doing videos with like the alert emergency little, candles in the helmets because basically it's the end of the world in the UK. So when you hear social media people kind of talking like that, that's your cue that, hey, you know what? The public is really scared. They're really afraid. And sadly, remember who drives this fucking bus? So they're probably being played. And, it's just, if you're watching this video later on, it's just like Bitcoin. It's the same damn thing. When Bitcoin was 60 some odd $1,000, and I'll come out and I'll say, buying Bitcoin here is stupid, I could get fucking burned at the stake. It's the exact same thing, just going the other direction. It's identical. So, if you are a bull, this is exactly what you want to see. And you want to hear those goofs on fucking social media just getting ready to basically call an end to capitalism. And of course, what does the damn market do? So in the face of this, and this is where I got really interested, if we go and look at sort of the internals, look at this beautiful turn here on the Dow, and the market just popped high here. So where is that? That's like third, fourth, right? And you can already start to see now the indicator is actually spitting out W's. The teal is actually pointing up. That's pretty darn bullish. So where's that? September 3rd, 4th. This is the market that got my attention was the Dow Industrials. So that's this trade. So where is the third, fourth? Oops. October 3rd, 4th. So that is this reversal pattern. And, frankly speaking, you've probably heard me say this before, but I think it's critical for you guys to learn this. We as traders, we don't really even want to fight this fight. Because frankly speaking, we don't know what's going to happen, right? In the education program for you level oneers, you're going to learn that in a couple of weeks, this is actually what we call the institutional fingerprint, or it's basically where the institution said, all right, we've got the kids freaking out. We've got them scared. Political turmoil in the world. Was this when the Bank of England did all its shit and all that? And the institution, keep in mind, we're pointing down. This is a bear market. So you don't want to step in front of that. But somebody came along and said, no more down, you go up, right? And that's what we call our institutional fingerprint. Because we can look back in hindsight and we go, wow, where did they put the floor in? Where did they stop the selling? Where did they, say thou shalt not go any lower? Well, it's right there. You can see it in glorious Technicolor. Make a note of that, right? And of course, level oneers, you'll be doing this, level 2 and 3s, and everybody else, you already know this shit. But we don't even really want to be involved in this fight. What we want to do is we want to let them reverse the market. And you might even argue lower lows. They reverse the market. We go back to our indicator. And this is just one indicator. Remember, there's a million different squiggly lines you can use. But notice on October 3rd, so that's this pop right here, notice the lows from September are higher than the lows from late August. And you can even argue that, well, even looks like these lows are making higher lows. We go back to our price chart. And, there is late August, right? There is late September. These lows are lower. That's called a divergence. Everybody get that? Lows in August, lows in September. These are higher lows. On the price chart, these are lower lows. And if we pull up any indicator like MACD, RSI, maybe even Willie, you probably see the same damn thing. Oh, yeah, there it is. Lows from, lows from August, the end of August. We see MACD, lows from September, higher lows, lower lows. That's divergence. I like to use, this is a relationship of the moving averages of this actual asset. The breadth indicator is actually a measurement of the entire market, all 30 issues inside the Dow Industrial Index. It's fascinating how you can measure the actual Dow Industrials itself. Do you trade the stock market? Or you could measure collectively the health of the 30 stocks within this Dow Jones Industrial Index. Do you trade a market of stocks? So this is a measurement of trading a market of stocks, seeing the divergence. This is trading the stock market. And really, divergence is divergence is divergence. It doesn't surprise me that if the individual components within the Dow themselves are in divergence, relatively speaking, on this move down to here, that, the Dow itself and futures and derivatives products, they would also be in divergence. Keep in mind, as I had sort of started the video off here today, there's a million different ways to skin the cat. This is just yet another way to skin the cat. It is a very unique perspective, and I think it's an incredibly valuable perspective that not many people in the marketplace follow. This concept of breadth, that rising tide lifts all boats, falling tide sinks all boats. That's what this concept is. Do you trade a market of stocks? So, I would just simply say, as I said there, we get from the histogram readings in September that the public is panicking. The market is actually washed out. So now at that point, we should start thinking, all right, what are realistic upside objectives? And I think probably the easiest one to think about, and I've told all of you guys, and probably you guys should be able to recite this in your sleep, but the easiest, and I'll use the DIA just as a stock proxy. The easiest measure for you to sort of think about is what's a realistic bounce is the 50% rule. So when we're down here and our indicators are washed out, the histogram saying the entire market's completely oversold, what we should be thinking is not, oh, we're going to go to new highs. We should be thinking, what is a natural 50% retracement? What do you think? Does that make sense? Why the market rallied to where it is right now? Is that realistic? Is that logical? I'd actually say, yeah. Oops. That's not unrealistic. It's actually very normal. We could probably also, draw a simple trend line. I don't know, let's keep it really simple. Like connect the dots, 1, 2, 3. Oh, look where we are. What a surprise. Also too, and actually level tours just did this. This is the bottom, just looking at this particular price range. This happens to be the bottom of value right there. So my hunch is that will be a huge battle point, whether we actually accept back into value or not. But you can see that that'll probably be a bit of a focal point. Remember, I was telling you guys about gaps earlier today. Do we have some sort of rule about price gaps? Should price gaps actually get filled in? I don't know whether we fill in these ones right away, but I definitely think that this one just got filled in. Boosh. I think Apple is actually feeling a lot better in life. So maybe Apple might contribute to helping that gap get filled in. It's also that gap right up there. So, when we were down here and the histogram was flashing majorly oversold conditions, right? That's this image down here, right? And the histogram just looking like absolute crap. You should be thinking in your brain, I probably want to start hunting long setups, looking for 50% bounces, moving average tags, gap fills, trend line revisits, all that kind of crap. So, and then the actual trade itself, I even tweeted it out. I wanted to be nice and public. I wanted everybody to see this coming 100 miles away, because frankly speaking, I think it was an absolutely perfect call. The irony of it all is the only thing I didn't do was take the damn trade. But interesting how Mr. Musk now doesn't like me very much. Oh, Mr. Musk is putting the shadow ban. I thought he was into all that free speech bullshit. What a hypocrite. Hey, oh, look at that. Mysteriously, it's come back now. Anyway, where are we here? I wanted this to be as plain as day. So now when you see this in the future, and it will be my pleasure to just keep showing you this over and over and over. But frankly speaking, I thought, oh, wait a minute, before we go there, we definitely have to check in on the metaverse. How you doing, Mom?
Oi, Ma.
Ma. Oh, Ma. Hey, what are you doing with Mr. Zuckerberg? Ah, you caught me. Ah. Ma. Sorry. Every time I see that, it always makes me laugh. Ma, you slut. Hey, there's the trade, right? So we had our signal come in. We had just the most beautiful structural bottom. And lo and behold, look what fires here. Holy crap. If you don't know what pattern this actually is a cup and handle pattern. Remember, there's that confirmed bullish divergence in the MACD that I showed you earlier. Willie stupidly oversold. And actually, I call this an L Tangonator setup. So actually, it was absolutely perfect. I mean, and on top of that, like, so what I suggest to people is you have trade location, you have indicator confirmation. You could use the indicators of the actual asset itself, or in this case, now you have a secret weapon in that you have the breadth indicator as, remember, this is measuring the tide. Think of this as your tidal indicator. Think of this as the actual indicator of the boat that you happen to be in, right? Hey, and this is a divergence. Hey, we're taking on water. Oh, Jesus, Willie's stupid and he's drunk. Oh, we're dead, right? Get the fuck out. Sell. Hey, things are looking good. Hey, we patched up the holes in the boat. Right on. Hey, Willie's sober. All right, let's rock and roll. In comes big cup and handle, and away we go. Yeah, you would think there'd be something like this, 3 steps, right? Location, indicator confirmation, price structure, go. And this is kind of a cool concept for you all to think about as well. So I like to have at least 3 or 4 like location indications, kind of like what I was just showing you there a bit. Why would I think that the Dow is going to run out of steam up here? Well, and really, if we just go off of this range alone, we've got the 50% rule. We have the downtrend line. Actually, interesting. This is just the middle of value. I don't know whether that's relevant or not. We have these price gaps. We have horizontal support and resistance. It was interesting. This bar failure alone was a naked POC, if I'm not mistaken, on the S&P 500. And Chris pointed this out. That's what this failure was right here. So this is a cool concept that we teach in our level 2 program, but super duper advanced, that this was a fantastic trade location. If we look at things like session profiles, that was what they call a naked POC sitting floating out there. Right there, and look where the damn market stopped. There's the naked POC. There's the rally peak. Boom. And then it pulled all the way back, and then Apple came out with their wonderful news. Woohoo! I'm still a bull. All right. So point here is I like to have 3 reasons to justify taking trades. I actually like to have 3 location reasons. Then I like to have. And now I think, especially for site members, now I think, and let's go back to that Dow example because I kind of got off topic here. Now I think you can actually make the argument we could have 3 indicator confirmation reasons in that. I mean, hell, we could have 4. I mean, this was the most incredible volume signal, and that's just steaming higher. But if we go on a daily chart, that's what I was talking about earlier. My 3 indicator confirmation readings in the past have been things like OBV as volume momentum, MACD for raw price momentum, and then Willie for oscillation. Willie oscillating from overbought to oversold, stupidly overbought, stupidly oversold. There's no reason why we can't now incorporate into that 3 indicator reasons. Give me underlying breadth confirmation, which simply confirms that this is actually a bull market that you are buying, or this is a bear market that you are selling. It works perfectly fine by me. That's half the reason why we built this darn thing. So, all right. Hopefully that was a good tutorial on using the breadth. And if anything, Chris, maybe we could bookmark that and sort of splice that video We could throw that into the video lectures onto the library. I don't know where Chris is. Chris, are you still here? Yeah, maybe on that document that you keep of all the shows, maybe you could put a little note on today's document that maybe make the time reference to when that was. And I wouldn't mind working with you when we throw that in here as another sort of example of how to use the breadth. That wasn't bad. I'll go back and edit through that. Okay, so hopefully that helps, Raz. I don't know where you are, but hopefully that gives you a small introduction. Also, too, what I would say is Josh has been working away. This is TRI Twitter Josh, who's a total fucking rock star. He's been working. Oh, has he been visiting mom in the metaverse? No, okay, no, that's not quite. Quit with that. That's crazy talk. But I wanted to show you, Josh is basically responsible for this blog. This guy here. Actually, I wonder where he is. Can we see him? Anyway, he's around here somewhere. Maybe he's the one taking the picture. Not weird how he's not. Maybe Josh, did you come to Vancouver? Maybe he wasn't in Vancouver. I can't remember. I remember he was in Vancouver. He was always sit out in the back table with Chris and his crops. Chris, you would have loved the crew in Vancouver. Mind you, I tell you, I think Andrea, Chris, anyway, I'm surprised. Oh, there he is. There's Josh right there. Like Joshy. Anyway, and actually it's cool. Joshi Nadia wants to come into Portugal with us. So you're going to hear Joshi 24/7. Anyway, Josh, there he is. There, you're way over there. Yeah. He's working on a manual for the site, which I'm so impressed with. The manual is so cool. It's written in the way that, like, you guys, you Gen Zs or whatever millennials we're supposed to call you, you would really, really like this manual. So actually, I was even talking to Josh recently, and he said he's still working away on that. So that's the kind of document that should be in the library. But along with that, I like the idea of what I just did there. I should be able to piece through. If you could just make a time reference, then that way I can go through and just clip the video, just edit it. Maybe I'll even download it and edit it a bit, and we can do it in there. That should be good. Okay, blah, blah, blah. Talking way too much. Number 2, Brian, what do you like in a woman? I hate to say it, but if you know, actually, it'd be interesting. I don't know whether any one of you knew. No, none of you knew JoJo. Remember, I'm still married, which it's heartbreaking because I sit and I literally cry about my wife on basically still 11 years later. I was crying about her yesterday. Somebody put out a tweet and I was just like, fuck, man, I still love my wife so much. It hurts so bad. Anyway, just is what it is. So I even made reference to her yesterday. So that's the problem, is that, and somebody asked me about 5 years ago, I tried to go out on a date with a girl and I just sat there and I just talked about her all night long, right? As I even said here, one of my wife's favorite cute sayings. She used to always say, "Oh, that's so pretty, pretty princess pretty." She always fancied herself a princess. Man, I sure fucked up that. Anyway, poor girl. Sure hope you're doing okay, sweetie. So, I mean, I don't know. I mean, are you talking hookers and below? I suppose double D's, all that kind of crap. But I don't know whether I'll get the privilege to ever be in love with another woman again, to be honest with you. Anyway, so I don't know. Just a good person, really. I mean, the irony of it all is good person is a good person is a good person. Thanks for asking. Appreciate your sentiment. But Maybe this is probably more of a question not to be asked through one of these public broadcasts. For the record, I'm still married. Yeah. Maybe your girlfriend is an older Polish sister or something, Josh. Anyway. Number three, hi Brian. I looked into IMIN. You showed a couple weeks ago as a potential planning flower setup. Most of all the criteria fit, except earnings is negative. And they issued 2x shares over the last 2 years. Yeah, they just rolled their stock back, eh? How much weight would you assign to these negative fundamental aspects? Earnings negative. Well, you got to understand these venture cap stocks. I mean, first and foremost, what kind of stock are we talking about here? Where's our chart? So just everybody understand. IMIN is not a blue chip stock. It is a venture capital name, and it is a grand total of 11.5 cents. So I would also say too, we are heading into the tax loss selling window. So you should see this thing weak through here. I do like the fact that he recently rolled the stock back on a 1-for-3 basis. Basically cleaning the stock up for the next bull market. If I'm not mistaken, I think he got going in earnest back. Yeah. So notice 2015. There was the 2017 bull market. It doesn't look like this guy really participated too much, but in this most recent market run up, he really did participate quite a bit. Ideally, what we really would like is we would like to know that the insiders are long the stock from the levels that we're long from. And we'd like to know that they're relatively low shares out. And we'd like to know that there's no debt. And if there is any debt, there was any debt, then the people that were owed the money took shares in the new company structure in lieu of the debt. That's the ideal scenario. Really, one might argue that that was the case on a name like this over here. How much is it so now? I don't know. I mean, we just start off. We've got listed shares outstanding 45 million. That's a bit too much. We would ideally like that to be 20 to 30 million. So that's still a bit heavy, to be honest with you. NFTs, fundraising campaign in Metaverse, Web.3, Canadian Blockchain Summit. Probably if you were going to do something in this space, get off your butt and go to that Canadian Blockchain Summit. That would probably give you a whole bunch of really interesting ideas to consider. And actually, you'd probably get to meet the guy. His name's Robert Eady. He's as big as a bus. There's no way you'll miss him. He's an old mining guy, and I would be, ironically enough, the whole crypto mining, this is kind of a fun side attraction for him. But it'd be interesting to go to that blockchain summit. It looks like it's old news now, but actually just sort of rub shoulders with these guys and get to know them in person. Looks like INIT 18 conference to be hosted in Mexico City. So it looks like he's pretty damn active. Investment conference in Munich, Germany. Good God, the guy's all over the place. And of course, all on your shareholder expense account. So it looks like he's pretty active. I guess previously there was 120 million out. Is that how that is to be interpreted? So there's 45 out now, and there was 120. 120, that's too much. So if anything, the fact that they rolled it back is a bad. What you'd like to find out is that new options to directors were granted. And then, like I said, I don't know if they're losing money. Are they racking up debt? Where are they coming up with the capital to keep the lights on? That's always a little bit concerning. So, I guess I'm not overly impressed with the number of shares out. Probably into tax loss selling season here. Yeah, and now, of course, they just did a rollback. So there's going to be a whole bunch of incentivized old shareholders to dump stock into the year end. Probably, to be honest with you, I mean, it's cool to see that we do have some divs trying to come in here. So looks like that div confirmed in on a big rally. Could get a div that confirms there. Divs all through here on RSI. Willie was stupid over here, so that's basically around the same price. It did actually have a nice little upside outside reversal bar. Doesn't look like it ever confirmed, but you can definitely see that the street was kind of looking for some sort of bottom down in here. We have gone and W'd out off of that level, so that's basically 10 cents a share. It's 11 bid, 11 and a half offered. You can see pretty well bid there at 11. So, you can see 200 period moving average sitting at 21. So there's probably your seasonal rally into like the spring. This to me looks like pretty much a buy when it snows, sell when it goes kind of scenario. Looks like there's a couple gaps to be filled into the upside. I don't know whether you get your revisit up to there until maybe like the next cycle, but I could very easily see just a technical play off of that range there. Get the mark, like you're gonna have to get like an initial kind of like what you had here. You're gonna have to have initial rally to get the market back above 200 SMAs. Then you see it slip back down. Oh, Jay's lost it. Then back above 200 SMAs, then slip, then back above 200 SMAs, then slip. Oh, Jesus. So we're in the process now where, at best, we look for a move back above at 200 SMA, and then, do we actually hold the SMA and then turn back up, which would be like this scenario here. Back above SMA, do we hold the 200 SMA and then turn back up and woohoo, big bull. So fundamentally, yeah, I mean, I'm not overly impressed one way or the other. Too much stock out. They are bleeding money. Like if this thing's 10, 20 million shares out, then what ends up happening is the market cap is about $1 million or so at like a dime. The shells themselves, they go for about $500,000. So if the company's got any kind of assets, then you're buying a cheap asset. But this thing's worth $5 million. They're bleeding money. I don't see a price to book ratio. Like it might be interesting to go through the screener and see what the price to book on this thing is. But I'm not overly impressed. I mean, 45 million is okay, but it's not that great. And as you pointed out, seeing this kind of stock out, excuse me, these kind of earnings, that's not really anything to get excited about. I suppose there's your 52-week range that creates that 50% rule. So that's, in fact, I might even argue your 50% rule here. 6 plus 57 is 63 divided by 2 is 31 and a half. So 200 SMA, I think, is actually being a little cruel. And notice, 50% of that range there is 36. So I think you can get a rally up into that 20, 30 cent area. Is this, how do you describe this? I would have liked to have gone to the company's website and seen news about, let's see, do they even have a website? I don't even have, oh, here it is. Seeing news about like options to directors. I would really like to see that because I always like to buy these darn things. at or below where the directors are long. But hell, I mean, I bought a stock last year at or below where the directors are long. And then they went and they issued a ton of debt in the form of convertible bonds, which is exactly what we don't want to see. So yeah, they announced the consolidation. Might be interesting to see if they have any options to directors news here. So yeah, you can see they had 99 million out with another 22 million coming. So they had 120 out. That's just way, way too much. So interesting. After the consolidation, they'd had 33 million out. So they've already issued another 10 million shares. To me, that sounds like, how did they just pay for Mr. Edie to head on over and have a good old time there at these conferences, Mexico City and Germany and all that kind of shit. Yeah, looks like he's living pretty high on the hog. Number of extensions and orange stock adjustment. Okay, so it would have been nice to hear that they had another issue of options to directors. Doesn't look like I see anything like that. No idea who this guy is. Maybe my buddy Robert Eady might not even be in the company anymore. I don't know. Ooh, also no idea who this is. Karim Shroff and Salem Musa. No idea who either of those are. What we would have liked to have seen is Mr. Shroff and Mr. Musa, who have just been issued 10 million options to directors at 10 cents a share. And then I would be like, all right, I'll hop on his coattails. And that's really the model of VCIM. So I don't see that. I see 45 million shares out. So that doesn't meet the model. And I have no idea how much debt these guys are carrying. So I would be leery, to be honest with you. I think they're probably better fish to fry. Let's watch how it acts into the year end. Fundamentally, meh. I think it's just going to be operating just like every other cryptocurrency stock. You see how the bigger boys in the cryptocurrency space are acting. They've got W's working here. So should it surprise us that IMIN has a cute little W working here? No, I don't think so. Shouldn't surprise you one bit. Is it realistic? Buy when it snows. Here we are, November. Is it realistic to see if you can accumulate? Notice that's a price gap all the way down to, look at that, there to there. That's a price gap right there. So you want to work your bid there at, that's 7.5 cents. So you want to work your bid at 8 cents. See if you can get some cheap stock. I think the original options to directors were at 6 cents. So kind of like this bar right here. You notice how they left the gap. They opened it up down here. Actually, I guess they opened it up here, took it right down, closed it there, filled in the gap. Should we see another day like that? Sure. And then kind of my cautionary wording following the Fed announcement about how the broader market's going to act, i.e. that election sort of prognostication. I don't know where the hell I had that. I don't think it's over here. I think it's over here. This stuff. All right. I like the idea. Well, yeah. Oh, right here. There. I like the idea that we're probably going to have a bit of a pause here through November. So could you get a fill on that stock down at 8 cents through that sort of pullback? What does crypto do through here? I wouldn't be surprised if crypto does have a bit of a pullback too. So just be forewarned. If anything, the pullback will give the Doge people their opportunity to buy their second car, all that stuff. So it's not a pure VCIM play. I'm just going to say simple as that. Too much stock out. We don't have any news about options to directors, and I didn't see any news about shares for dad. So it's not a VCIM play. Is it a technically attractive proxy within the crypto space? And actually, you know what? You want to see what the crypto space looks like. It's really, and I've been saying this all along here. Let's see if I can find it for you. And I even put a tweet out to this effect. You want to see what the crypto space looks like? Fives and sixes. Fives are basically assets at the bottom end of their ranges that have a long way to go back just to hit their 50% rules, right? That's the same thing as IMIN, right? So IMIN, there's its 50% rule. And gee whiz, that's got a long way to come back. But if we look at it on a weekly basis, is this technically trending up or trending down? And technically speaking, as long as this red moving average is below the teal moving average, it's trending down. So we see that this bad boy looks like this. And, you know, I would give this a 5. It's got lots of room to move up here. There's lots of money to be made when this rally comes, but it's still trending down. And gee whiz, the whole damn crypto market looks like this. Look at crypto top 30. We've got one name that actually did turn back up, ETC. I don't know whether it's still up. Well, it's hanging in there. If this thing can turn back up, away we go. It looks a bit heavy and there's no buy setups here, so I can't buy it. But basically it's ready to go. And you can see kind of like that IMIN, 50% rule is probably up in here somewhere. And then really looking at the whole damn market, the whole damn thing are all 5s. And of course, we just had Doge do its thing. So my hunch is that this is a printout of last week's price action. Hey, it would be nice. Can we call up Stuart and say, hey, Stuart, can I buy some of this Doge off you at 6 cents, please? You all saw what happened. The damn thing is double that price. And actually, it'd be interesting to see when Stuart's engine does update, do we actually see Doge turn back up here? We might. Right, where the hell is that Doge? Doge on the Doge. Not there. Yeah. Where's Doge? All right, I thought it was up here somewhere. There it is, Doge, 11.7 cents. So this will be interesting to see. We should be able to predict this. Is the weekly commodity trend survey going to give Doge a 6 now on its upcoming rating? So let's all check in with the system tomorrow. And what do you think, guys? Has this moving average actually turned up yet? Even with this big honking rally, the weekly trend still has not turned up yet, right? There's the slow moving average is at 8.2, and the fast moving average, even though we've had this massive rally, and you can see how it's turned up here, it hasn't crossed bullish yet. So it just goes to show how technically weak this entire market is even with that big ass rally on Doge, we're still technically still trending down. Now, if we kind of go sideways here for a little bit, it will probably do something like that ETC, because remember this was a pop, ETC pop there when I think Silbert said something, got it back up above, kind of like Doge just did this big rally. Then sideways, 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 sideways. And now do we have any follow through? And sadly on ETC, it doesn't look like we have any follow through. Well, we'll see. We're still pointing up here. Hope springs eternal. But as you can see from Doge, it still hasn't technically turned back up here. Big rally. This is what they call a dead cat bounce. That's exactly what I think this is. Okay, so I don't know whether that answered questions. I sure hope it did. But wow, sure was fun to listen to me rant there for a couple hours. It is now 20 to 1. So actually, probably not a bad idea for me to get ready to hit the road. What happened to do I have the Q&A document open here? I thought I did. Nope, not there. All right, now I'm just going crazy for feeling so lonely. Okay, it's not there. Where is it? Maybe it's over here. Oh, maybe it's over here. Hey, there it is. All right. Yeah. So, okay. So my simple answer is not a textbook VCIM setup. It's a little bit late to the party. It is a proxy on crypto. I'm not quite sure whether I can vouch for the management team anymore. I didn't see any reference to Robert. Maybe he's still there. Maybe he isn't. Might be interesting. Oh, well. While I got it here, might as well take a look. Let's see if Mr. Edie is even still around. He might be gone. Toronto. Head office still in Vancouver. We should give him a call. Should we give him a call on the daily brief tomorrow? Oh no, Stuart's doing. That'd be funny. Maybe somebody remind me on Tuesday. Maybe we'll give him a call. Board. Let's see. Is Mr. Edie still around? Nope. Oh, looks like he's gone. Yeah, I can't even really comment on the quality of the company anymore, to be honest with you. It's just another crypto name. I don't know whether any of these names ring a bell for you, but they don't ring a bell for me. So my hunch is there's probably better fish to fry. And in fact, why don't sounds to me like you're interested in this topic. So why not, if you could DM me on the site, and maybe what I'll do for Tuesday's TRI Secret Options Formula club meeting, Francis, if you could DM me, just remind me to do the VCIM screen, and I'll do that for the Tuesday club meeting. Then maybe I'll send you the link just so you can see what came out of it, and we'll talk about it on the Wednesday's daily brief. All right. Any of you people over on YouTube have any questions for me? Let's see. Well, looks like it's pretty quiet. Oh, there is Francis over there. On the screener, I saw price to book at or near 0.2. Oh, wow. In fact, on the TMX website, I think there's actually a really cool screener. Over here we go. This might be a fun little tutorial for everybody. If you're into penny junior piece of crap stocks, actually, one place I like to buy penny junior piece of crap stocks is Canada, because we had a really bad scandal in the penny junior piece of crap stock market back in late 90s. And so as a result, these companies, they kind of have to sign off everything that they produce. They have to literally sign in blood. So it's a lot harder for them to really blatantly scam the public than, say, down on the bulletin board down in the States. So what I would do is just really simple. In fact, actually, it might be interesting to see if we can get like a sector. We'll also look for venture cap markets. Me personally, again, we're talking piece of crap stocks, so we'll filter by stock price. And I would ideally like to do shares outstanding, but we might just do it through market cap. In that, if we want a company that has, let's say, 30 million shares outstanding, we don't want to pay more than $1, then that means we don't want to even look at companies that have a market cap over the 30 million. Let's Let's see, is there anything else I would throw in here? There's market cap again. Just for the purposes of this, we'll try and keep it as simple as possible. There's book value per share. We want price to book. All right, so that's the reference we want. And ideally, I don't want companies with a lot of debt. So we'll definitely screen for debt to equity, but we'd like to have that as low as possible. Not looking for dividends. A lot of these companies won't have earnings because they're venture crap piece of shit stocks. And I don't think there's anything there that's going to help us. So let's see what happens. Okay, so let's go sector. We would like to look under sort of technology, I guess. Then we'll go venture exchange, stock price. We don't want it above $1. And maybe we don't want it less than, say, I don't know, 10 cents. Oops. Let's say that's a minus sign. There we go. Market cap. We said we wanted no more than 30 million. Oh yes, move that down. Okay. And we don't really want lower than, say, 250,000. 30.24. You entered a lower than minimum. Okay, that's fine. Oh, we don't want a million. What the hell is the display medium? Okay, what the hell does that say? 100 million, 60 million, 18 million. Really, I want cheap. Cheap, I want lower. Why can't we just go to, well, no, we just do 0. 13,000, okay, fine. Go away. One more. All right, price to book. Oh, it's still lower than that. Oh. Really, I don't like having stocks greater than 2 times book on the books. And it gets a little bit expensive. 1.93. Well, that's interesting. I don't really want a negative either. I don't like when I see negative price to book. Okay, and debt to equity. I do not want to see any debt to equity, but I also don't want to see a negative number. So we're going to say 0.3. Okay. No results. Oh, that was fun. Obviously, this is 3 million. There we go. All right, well, that's interesting. A few names for us to chew on. Some are losing money. So this is probably how I would start going through my screening process. This is obviously just in the technology arena. But it's not a bad way to start off. We got what, 1, 2, 3, 4, 5, 6 names to consider. So I might go through each of these and look and see, what's been the recent news, right? We can just go something like that. Go 96 million shares out. Nope, not interested whatsoever. Too much. So this is the one thing that's a problem with screening by market cap is you kind of get this. Let's maybe even go like 50 cents. So we don't have to deal with those. Oh, still that zone was there. All right, let's see what I got here. YNV. All right, we've got 124 million out. Sorry, not even the slightest bit interested. No. So obviously the screen's not working. A little bit surprising. 79 million out. Come on, what the hell? So obviously I've done something wrong with this. So it's clearly not right. But this is, I'll tell you what, I'll work on this. I think Sjord's got a presentation for the community tomorrow. Maybe on the back end, while he's doing his presentation, I'll work on just putting this together. And we'll just do a quick recap of what I found here and how you can build this. But that's sort of the general idea of how I would do this venture cap. I would start this. This clearly is not right. I've done some sort of math wrong here. Actually, I suppose at 50 cents a share, then probably the maximum market price. Yeah, so there's something clearly screwy going on here with this. And the minimum they have is 18 million. It seems a bit suspicious. So. All right. Well, anyway, that was a fun exercise, a waste of time. We are 10 minutes to 1, so I probably ought to head on out of here. Interesting to see. If you are hunting longs in Bitcoin, I think you probably just want to, number one, let's maybe wait for this 33 to be traded to. Then see if we can get 3 higher lows to frame some sort of trend continuation pattern. And while that's all happening, hopefully we can get these momentum indicators to start Wing out and maybe turning back up. So I don't think there's a huge hurry to strap on new longs right now. There is this huge double bottom level. So it'll be interesting to see if new buy signals can set up off of this level. If they can, I'll probably hop in there and take a shot. But what I'm fearful of is this kind of action. Notice how we had basically this downtrend. Down, 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 down. Then all of a sudden, big rally out of nowhere off of a new low too, just to piss you off. Big rally. Want to hunt longs, want to hunt longs. I don't really have any W's. We just broke this trend line. Rule is I want to have a W. I mean, is that a W? Ooh, that's sketchy. Big fat M, and now, oh Jesus, now we're working our way back down. I don't think I ever really got a buy signal out of that. That's going to be sort of the same sort of thing here. You know, there is the trend line. Do we break out of it and violently jump up? Can you wait for some sort of market structure? That's what I'll be doing. I mean, hell, if we can break out through here, fine. Give me, 3 higher lows. Maybe what I'll do is I'll frame my bot off of this low here. Oh, that's still too big. Well, that's still too big. Maybe we got to go there. There you go. So if this does set up the way that it does, then what that tells me is my next long setup will look something like that. This would probably be right down the alley of guys like Paul, and his group, sort of just clipping the market for a few bucks here and there. So if you are trading this, thinking A, B, C, D's, trend line break, give me 3 higher lows to work with, set up a nice W off of that 25 line, then you got a nice bot set up to work with. So that's probably what I'd be thinking right now. Having said that, we are so close to the Fed. My hunch is probably my hands are going to be tied for the next couple of days. So really want to see what happens on the other side of this Fed event. So. Okay, I think I'll leave it at that. PMA for the win. I hope you guys got some value out of that. By all means, if you could wish Liam and I good luck on the road today. I'll see everybody for Sjord's awesome super duper presentation tomorrow. If you are interested, feel like, pop on the site. We have a 30-day trial, so you can come and listen to Sjord's presentation free of charge tomorrow. And kick the tires on the breadth indicator. See if it's something to your liking. We don't really give too much access on the free 30-day trial, but basic site membership. And also too, we give you access to the video library, so you can sit here and you can just watch videos out the butt. And actually, I've done another one. I've done a weekly commodity trend survey video as well. So every week on Rumble, I do a survey of different commodity markets. This past yesterday was a review of the softs markets. Previous week was metals and energies. Previous week was financials. Previous week was currency. So, week by week we just I go through on Saturdays and review them. So you also have that. We also, I don't know whether, I think I forgot to be honest with you, but we also have the Wednesday shows that we have on here. I should be posting those in here. And of course, we've got the daily briefs, and especially Thursday's daily brief with Julian here. You won't find that anywhere else. So, all right, I think we'll leave it at that. Have yourselves a great day. Thank you for the best wishes for Liam. Chris, if you could take us on out of here. The only thing left for Brian to say is bye for now. Hope you like the slick back hair.